In this presentation, we will record deposits and group deposits into the deposit form within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. We're going to be recording the deposits. Let's take a look at what that means in a few different ways. So if we select this plus item up top, we can see that we have the other tab over here, or the other section. We're looking at the bank deposits. The typical format of the bank deposits, or the one we hope the bank deposits will take, the format or the source of the bank deposit, is really in relation to the customer section, the customer cycle. We hope we're getting ultimately our deposits from the customers. Our bank account should be going up from money received by customers. That happens typically in a couple of different ways. One route is that we invoice the client for work that we did, and then we have a receive payment at some point. We receive a check in the mail. The other route being that we get paid at the same point in time with the sales receipt. Under either method, you might say, well, why don't we just record the deposit at the point we receive the payment, either the receive payment or the sales receipt. That's the point in time we would get paid, either with a check or with cash or some other payment. If we get a check or cash, then the goal is for us to be able to group that together and put it into the checking account so that it is grouped so that we can tie out our books to the bank's books. Therefore, if we have a cash or check, the receive payment and sales receipt is usually put into undeposited funds, which we can then take out of undeposited and put into the bank using the bank deposit form and group that information together so that it will then appear in our books in the same grouping as it will appear on the bank statement, allowing the bank reconciliation to be done much more easily, allowing us to compare our books to the bank, allowing the bank statement, the bank, to be a third-party verification for our cash account, a verification that's huge, that really helps us to verify a lot of our activity. So other way that we can see this, I'm going to close this back out, is to go to the reports on the left side. We're going to open up our favorite report again, the balance sheet. So let's open up that balance sheet once again. We're going to change the dates from 01/01/19 12/31/19, that's January through December 2019, and run that report. If we take a look at what we have here, we have this undeposited funds. Remember, the two sources of that, if we select the undeposited funds, are payments that we received payment for invoices we issued an invoice, then got paid, and then the sales receipt. So we got paid with the sales receipt. Typically, we're getting paid with cash or we're getting paid with checks, things that are compiling up that aren't making it to the checking account yet, which we now need to deposit into the checking account, which we now need to group together in some deposit format so that our system matches what is on the bank statement. If we go back to our report, then the other side now that the deposit form will typically take is the checking account. The checking account will go up. So our imagination now is that we're going to take all the money out of our cash register. We're in our store. We made a bunch of sales during the day. We're at our cash register. We're going to take all that money out of it. We're going to take any checks that we got in the mail for invoices that we had issued that came in the mail for us now. And they add up to this huge amount and that we currently have not been depositing for a long time, apparently. And that typically wouldn't be the case. Of course, we would do this on a daily basis, would be ideal. And we're going to go to the bank and deposit all this money in some grouped fashion. We're going to deposit it all together, and we're going to record it in our QuickBooks system in the same format that it will be shown on the bank statement. That's what the deposit form will do for us. So we're going to go up top to the plus item, and we're going to go to the bank deposit. As we select the bank deposit, if we have sales receipts and receipts of payments outstanding, then they'll be shown here. We'll get this screen that says payments and sales receipts, and we'll be able to group these payments and sales receipts together as we go to the bank and put them into the system. Now, clearly, we would normally do this as we go. Each day, at the end of the day, we would group this stuff together, deposit it to the bank. We have grouped this information a little bit differently so that we can group together certain types of transactions more together and concentrate at them at one time, rather than in chronological order completely, so that we're bouncing around all together in the accounting cycle. So we're going to have a couple different groupings. We're going to group them together in a couple different ways just to show that grouping process. First, we're going to say that we're going to go to the bank and deposit these two items, the Smith guitars, string music, these two checks for the 8,000 and 420. If we were to select all of them, we would select all. We could use this item, and this would be used often if we were to deposit every night, and of course, and if we had the clear button, that would clear everything we have here. We have this sum, and this is giving us the total deposits that we have thus far. So this is the total of all deposits. These are the selected deposits, that being the 8,000 and the 420. You may ask, what if we just want to make a deposit and it's not related to the sales receipt? What if we got a deposit that we want to enter directly into a deposit for some other reason? Possibly we had a deposit that we are putting into the account from us, the owner. We could do that a couple different ways. We've seen that in the past, that we did that in the register. We used the register to put the deposit in. Typically, from my perspective, that's the easiest way to do that. If you have a deposit that's not going through the normal cycle, I would typically use the check register as we did in prior presentations when we set up the first account for something like the owner putting money in, or you can use the deposit form and add the deposit down here where you would have the process of adding the deposit information, and you can choose the account then, what the other account will be, which would typically be something other than the normal process, something other than sales. Because if it was a sale, you would be using an invoice or a sales receipt typically in order to make that sale. Once this is filled out, we have the options down below. We can print it once again. We have the save and new, or we have the save and close. We will have another transaction, so we will put the save and new. So we're going to say save and new. Now we're going to make another deposit, and we're going to group the rest of these deposits together. So now we have the total deposits. We're going to group them together. We're going to change the date to the 17th. So I'm going to add, say, the +1 and add it to the 17th now. And if we scroll down, then we have these deposits remaining. I'm going to say we're going to select all of them. Again, you kind of want to imagine that we're having the deposits till the end of the night, and then we would probably deposit everything we have. We wouldn't deposit two separate chunks unless for some reason that would be beneficial for our records. We would want to see the two separated deposit forms for the two separated groups of deposits in the system. Otherwise, we would go to the bank every night and deposit whatever we have, clearing out the undeposited fund, putting it into the bank in the same format as it will be seen on the bank statement. So we're going to go ahead and save that. So we'll this time say save and close. Save and close. Then we're going to go to our financial statements. We're currently on the balance sheet. So January through December, that's what we had open before the deposit. I'm going to run that report once again just to refresh it, make sure it's up to date. We're going to then look at the checking account, going into the checking account, selecting that item. Here is our deposits down below. It's going to be indicated, of course, with a deposit. And the deposits will, of course, for the checking account, increase the checking account. So it went from 105 up by the 8,420 to 113,420. To see the detail on the deposit, we select this item, and then it'll give us our deposit information. There is our deposit form. Note that this deposit form is a form for QuickBooks. So forms don't mean something that necessarily we're going to give to someone else. We're not providing this to someone. It might be thought that because something's called a form, it's some type of thing that we need to give to someone for some type of verification. We may or may not internally do that, but the real reason it's called a form, or one reason it's called a form, is because it's the data input, the driving form that we don't need a journal entry for, but which QuickBooks will make a journal entry with. We're going to data input into this form so that QuickBooks can then use it to drive the transaction, record the transaction. The bank deposit, of course, this force means primarily that the checking account will go up. Typically, that's what it means to be a bank deposit. The other side will go wherever we determine it to go. In this case, because of the format we have set up, it will be decreasing undeposited funds. However, we can choose any other account if it was for some other reason we got the deposit. So I'm going to close this back out. Also note that here's the grouping that we'll see that deposit in. So there were multiple items, multiple checks or cash that were included. It's going to show up in our books at that 8,420. If we were to question the bank or say, hey, is the bank right on their deposits? Can we check our stuff to the bank? it would be best if we deposit in a format similar to the bank. We'll see that when we do the bank reconciliation. Bank reconciliation, highly important thing to do, and you want to make it as easy as possible so that you will do it. You want to be able to make it easy so that it'll be easy to do, not a pain to do, and something that you will do because it's one of those internal controls that every company can benefit from, large and small. Here's the other deposit, same idea. If we go back to the report summary and look at the undeposited funds, it's now 0, which is what it should be doing. It should go up and then, of course, down to 0. If we select the undeposited funds, then we'll always have this information, the payments, and then the sales receipts increasing, and then the deposits decreasing. So these decreasing, payments increasing, sales receipts increasing, the deposits bringing it down. Hopefully this happens on a daily basis. We have payments, sales receipt increasing when we get paid in the mail or from payments in our store in the cash register. And then we go to the bank at the end of the night, make the deposit and deposit those in the groups which we enter into the banking system. For more accounting information and accounting courses, visit our website at accountinginstruction.info.